Copper prices have reached unprecedented levels in Asian trade on Monday. 3-month copper futures on the London Metal Exchange surged by 0.8%, setting a new record at $10,848 per ton. Concurrently, 1-month copper futures climbed 0.9%, nearing record highs at $5 per pound. This sharp rise is attributed to a short squeeze on the Comex exchange last week, which saw heavy buying of long-term copper contracts forcing short positions to close, driving prices upward. The surge is further fueled by expectations of tighter copper supplies due to refinery cuts in China and stricter sanctions on Russian metal exports. Anticipation of reduced mining output failing to meet future demand, especially with the global push towards green energy and electrification, has driven long positions on copper. China's recent policy shifts, including easing restrictions on its property market and issuing a significant 1 trillion yuan or $138 billion bond, have also contributed to the bullish sentiment. The copper market is experiencing a frenzy, with prices reaching new records on the LME, driven by investors anticipating supply shortages. The short squeeze on the Comex exchange has created a significant premium over the LME, stirring the global copper market and redirecting metal supplies to the U.S. Gong Ming, an analyst with Jinru Futures Co., commented, "The Comex short squeeze is redirecting copper to the U.S. and tightening supplies in other regions." The Chinese market is anticipated to witness inventory withdrawals soon, with exports on the rise. Despite subdued physical demand in China, where inventory levels remain high, the ongoing price rally has strengthened copper bulls and attracted financial investors betting on further gains. Investors, traders, and mining executives have long warned of an impending deficit, citing the rising demand for copper in the energy transition and limited new mine supply. Copper prices have increased by over a quarter since the beginning of the year, and the prospect of a sudden tightening in ore supply could push the global market into a shortfall sooner than expected. Morgan Stanley analysts predict near-term volatility in copper prices following the recent surge, but maintain a bullish outlook for the metal. The tight supply outlook and optimism surrounding China's economic recovery are expected to continue supporting copper prices in the long term.